We've seen some big US data and there's more coming. Dual part of the Fed's mandate in 1 week. We've had employment, came out much stronger than expected. On Friday, we've got the CPI numbers, big inflation numbers. We've already seen Fed rate cut expectations pushed out from June to July. Could a bigger number from the CPI come in and push them out even further? Giving us a bit of deja vu from 2025, perhaps. Hello and welcome to ATFX's US CPI data preview. What we're focusing on today is the next big data number. Now, Friday, we've got CPI numbers, so that's inflation. Dual part of the Fed's mandate in 1 week. We've had employment, came out much stronger than expected. We've now got inflation. If that comes in sticky as well or higher than expected, as jobs did, we could see those Fed rate cut expectations pushed even further out. And maybe this time we get that rally in the dollar that we didn't actually see. Let's have a look at these CPI numbers. So CPI month on month expected to show a 0.3% increase. The core CPI also month on month a 0.3% increase, whereas the year-on-year number, a 2.5% increase. Now that's down from 2.7. Could be something that the Fed and particularly the White House are looking at could open the way for these rate cuts a little bit earlier. But as I said, if it comes in and remains a little bit sticky, it's well above their 2% level, then we could see those rate cut expectations pushed out further. Without any further ado, let's have a look at some of the technical opportunities that could be coming up in the next day or so. And as always, if you want to get more from us, please do subscribe to our channel. I think that's in one of the links below. So here we are on the Euro daily chart. And as you can see, we've seen some strong moves over the last few weeks, probably not as much as precious metals, but certainly this move up from sort of sub 116 all the way to just underneath 121. There's that high, 120.78. We moved back into the range with a bit of a dollar appreciation through the early weeks of February, but we've seen some dollar selling this week. This was a nice break trade the other day. That took us nicely up, back up to nice highs there around 119.26. We've capped out a few times there. So looking like a decent level coming in around there. There's that high 119.27. We're trading 118.76 at the moment. So that trend line, even though it's not looking too important, it's only got the one touch really. That triple top there around 119.25 could give you a good entrance. So we see weaker numbers from the CPI. We see a 0.1 on the monthly or 0.1 on the core monthly, or certainly less than that 2.5% on the year on year. Expect the dollar to get sold. Could be a good break trade. I'm probably not going to look at that trend line, but certainly those highs, triple top there around 119.25, 27, 28, probably give it a little bit of air. This could open the way back up to explore those highs way through 120 up around 121. Obviously, if we get this move that we saw with the kind of data we saw with the non-farms, if we get a stronger number, if the year-on-year comes in at 2.7, we see greater than 0.3, then we should see euro move back into the range. We didn't see that move overnight, but yields did increase. So keep an eye on these things. It could be, CPI could be a bit of a straw that breaks the camel's back, leads us to see some dollar moves back in, good for the dollar bulls. Some of those bearish dollar positions taken off. Immediate support comes in on this 200-day moving average. It's around 118.24. To be honest, on the size of these numbers, it probably won't hold it for too long. Real support probably coming in on the longer term trend line down here at 116.77. And then we've got a further moving average down at 116.33. But expect it to move back down there if we get stronger numbers. So good trading opportunity. Probably the most bang for your buck will come if we get weaker numbers and we see a break of this level here. It would open the way for a nice, what are we looking at? Maybe 150 point move back up here. Let's go and have a quick look at cable now. It's a different setup. So the cable chart, as you can see, cable is pretty much back in the middle of the range. We do have scope to move back up to these levels, 138.60, that previous high, 138.67. Support coming in initially on the moving average, round about 134.35, and then much longer term, 132. So the nice thing about cable is we know it will move on US data. If it comes in off expectations, it could be some big moves. So once again, weaker numbers could check out these resistance levels up underneath 139. Stronger number in the US could see us down to 134.30 and then further down to that 132, 133 level. So dollar yen recently, end of January, big moves down, lost about 4%. from what's just above 159 to basing out around 152. We're talking 700 points there. Was there intervention? We know there was certainly rate checking. We know there was certainly talking. Most experienced traders out there say that BOJ gave it a nudge at one point or another. This week, elections went firmly in favour of incumbent Prime Minister Takaichi. We're expecting to see a move to the top side. It was very limited. As you can see here, it topped out at 157.72. What doesn't show up here on the daily charts, there's three tops around those levels. A lot of people in the market looking at it as a suspicious level. Were the BOJ sitting there? Did people run into it? It did look like the market ran into a brick wall, to be honest, and then came down. As you can see, on the day, it closed down 0.85%. We then added another 0.95%. It's been a big move. It is reminiscent of this move. No confirmation of intervention. There has been talk that the tax cuts out of the Japanese government won't be as high as expected. That's one of the reasons for the move and the appreciation of yen. Also, we've seen the dollar come back, but the dollar move kind of started with this dollar yen move. So that then may have sparked some contagion across some of the other currencies. There's talk about hikes from the BOJ in March. There hadn't been previously. That's why we're down on these lows. But what it does do for dollar yen traders is this CPI number. We have got a close trend line that we could look at. We've got a trend line coming in, and look, last night's lows 152.54. Previous lows that we'd seen 152 and change. So that trend line coming in could be a good trade. Weaker numbers, breaker there, breaker those lows, opens away. Next support's initially down just underneath 151. 200-day moving average 150.50, but then it opens the way all the way for a move to 147. Possibly the risk for this move, and we did see it after this intervention previously, a move back up, all the way back up to just south of 158. We could get it. Stronger US data. If it comes in, if the yearly comes in 2.7, 2.8, that should take us back up higher. If the month-on-month numbers are well above the 0.3 expectations, could take us back up higher. And here's the gold chart. So interesting again on the dailies. Right? We know we have seen massive moves in gold. Covered it on several other videos which are available on our YouTube, of course. Massive move up here in gold. It took us all the way to 5,600 near enough. Massive move back down within a couple of days. Took us down 9% on the first day, and then we got another 4% down. Silver was even bigger, as most people will know. It's now re-established itself. Here's the trends back in place. It's starting to grind higher. But notice in the last few days, yes, there's been some appreciations, and they're still pretty big on a percentage move because of the moves have been so big in gold. But here you go, like another 1%. We've just started off around these levels. If we are near these levels, we're near recent highs. A lower CPI print, we'll see some dollar selling. We could see gold appreciate much higher, and then we're probably looking initially to these levels where we came down from on the 30th of Jan, around 5,400, and then obviously to challenge those all-time record highs. So plenty of opportunity in gold on this data as well. Conversely, of course, higher numbers. We would see it drop back into the range. I would suggest there would be a bigger move than these recent lows. We're probably looking down around these levels, and then trendline support now coming in around about 4,500. So plenty of trading opportunities on this CPI data. The dollar will move, especially if it is off expectation. As I said, non-farm payrolls, they've thrown it one way, thrown it the other. If we get confirmation from stronger numbers in the CPI, and I think that's the risk, it will really push those rate cut expectations out, and we should see the dollar fly. Good luck with your trading. If you need anything from us at ATFX, please do let us know. Thank you.